Great, let's continue with the next video, which is on the statement of comprehensive income. An entity presents all items of income and expense recognized in the period either in a single statement of comprehensive income or in two statements, a statement displaying the components of profit or loss, a separate income statement, and a second statement of other comprehensive income. Information: I have two puppies that I'm about to give away. So if somebody is looking for puppies, they are ruining my life and my garden and my videos. In two statements, a statement displaying components of profit or loss, separate income statement, and a second statement of other comprehensive income. Now, the statement of profit or loss and other comprehensive income is looking significantly different from what you are used to. Now, in the first place, they say it must be a single statement or two statements. So what does it look like? Let me show you. A single statement will have the name of the entity on top as a line item, statement of profit or loss and other comprehensive income for the year ended 31 December 2020. And this one, I'm going to speak about this now, according to the function of expenses. Now, there's a note, 2020 rand, 2019 rand, comparative figures. And then we're going to start not with sales less cost of sales equals gross profit, but with revenue, cost of sales, gross profit. Then other income, when we have two income streams, like for instance, we are selling computers, but we also do maintenance work on computers. The selling activity will be recorded here, sales, which equals revenue, cost of sales and gross profit. And under other income, you will have your income from servicing the computers, so service fee income. Also things like profits on the disposal of assets, that kind of stuff, that will be recorded in other income. Our expenses is now totally different from what you are used to. When we're using the function of the expenses method, and I will have to define exactly what function or the nature of the expenses. It's either one of the two, either the function of the expenses or the nature of the expenses. And you can go and have a look in your textbook. There's quite a lot of examples, so you can work through that in your textbook. Now, if I'm specifying that you have to use the function of expenses method, then it means that you will only have 4 types of expenses. The first one is the distribution and selling costs. The second one is administrative expenses. And the third one is other operating expenses. The fourth one, that will be the same. It doesn't matter whether I'm using the nature of expenses or the function of expenses, will be finance costs. Then I will get profit before tax, and you will see that there's a reference to a note number here. Remember when we did change of estimates, we already have done a portion of that note. We have said in that note, included in profit before tax are the following items, and then we say depreciation or whatever, original estimate, change of estimate. That was part of the profit before tax note. We're just going to complete the rest of the note as well. Then we get profit before tax. So my gross profit plus other income less my expenses will give me profit before tax. Because we're working with companies here, a company is a legal person, a legal entity, and therefore they are liable for paying their own income taxes. Now, income tax is based on your profit before tax. Please don't get confused between income tax, dividend tax, which we're going to do later in the year, or VAT. It's all different kind of taxes. Calculated differently, and it has its own way and the own method that we have to disclose those taxes. And then we get profit before tax, less income tax, profit for the year. So now our profit for the year, that is usually where our income statement has ended. Now, when we are making use of the one statement approach, we're now going to add another section to our income statement, other comprehensive income. And the only other comprehensive income that you are going to work with this year is going to be your revaluation surplus, gain on the revaluation of property, plant, and equipment. So let's say we had property, plant and equipment in our books at a cost price of 2 million rand. We decided to apply the revaluation method, and we're going to revaluate our property up to 5 million rand. So we're going to debit our property, plant and equipment, and we're going to credit a revaluation reserve. Now that credit is the credit that's going to be reflected here. You will see when we're going to record our profit for the year from the income statement in the statement of changes in equity, the profit for the year after tax will be added to our retained earnings. But our other comprehensive income, if it's a revaluation reserve, there will be a separate class of equity called revaluation reserve, and that will be recorded there. So in totality, we will still record the total end result of the income statement, but it will be recorded in two places, one in retained earnings and the second one in the revaluation surplus account. And then we get total comprehensive income for the year. So clearly one statement. Now IS1 gives you the choice. You can either follow the one statement approach or the two statement approach. Now when we are going to follow the two statement approach, it's going to look like this. Our heading is going to change. We're going to have the name of the entity on top still, ACCC 121 Pty Limited, statement of profit or loss for the year ended 31 December 2020, 2020 Rand, 2019 Rand, and note. The first four lines is going to look the same. If we're going to use the function of expenses, that is going to look the same, and we're going to derive at our profit for the year. Instead of adding another section to our income statement, we are going to do a totally second statement, and we're going to call that statement Statement of Other Comprehensive Income for the year ended 31 December 2020. So the heading again will now be in total, again the name of the entity, then the name of the statement, and then we're going to start the second statement. It is a separate statement, it's not a subsection of our income statement, it is totally a different statement. And we're going to start this second statement with our profit for the year. So we're going to drop down that profit for the year, and that's going to be our first line item in the statement of other comprehensive income. Then we're going to add the revaluation surplus or gain on revaluation of PPE, and then we're going to have total comprehensive income for the year. And again, profit for the year will go to our statement of changes in equity under retained earnings. Other comprehensive income in total, that will go to our revaluation surplus. But if I add the two together, in my statement of changes in equity, I'm going to increase my equity with a total of the profit and the revaluation surplus. Let's quickly, before I move away from this, let's just have a look at the expenses again. Now we said if we're going to apply the function of expenses, we're going to work with distribution and selling costs, admin expenses, and other operating expenses. Now, what is distribution expenses? That is all to do with the selling activity of the entity. Things like commissions paid to our sales commissions paid to our sales personnel. It is directly attributable to the sales action that takes place. So that forms part of trading and distribution costs. As things like freight charges on sales, freight on sales, that is a selling and distribution cost. Delivery costs to clients, that will be selling and distribution. If we have a delivery vehicle, the depreciation on the delivery vehicle will be form part of distribution costs. But if we have depreciation on office equipment, the depreciation on the office equipment will form part of the administrative expenses. Administrative expenses could be salaries paid to our admin personnel. It could be rent attributable to the portion of the building where they are actually sitting and performing their tasks. It could be things like the secretarial work performed by the company secretary, that is the administrative expense. We're going to have a look in all examples that we're going to do hereafter in different types of distribution, admin, and other operating expenses. If it's not a selling and distribution cost or it's not an administrative expense, it will be another operating expense. Finance cost, that is interest received and interest paid, and then the rest speaks for itself. Now, we said that we have to choose between the function of expenses method and the nature of expenses method. Now, again, in your textbook, there is examples of the nature. Now, let me explain to you the nature of the expenses. When I have a type of entity where I only have a few type of costs, let's say, for instance, if I'm going to prepare a pie chart, and let's say 50% is made up by salaries and wages, 30% is made up by depreciation, 10% is made up by admin costs, and the other 10% is bits and pieces over the show. Then it doesn't make sense to distinguish when you do your expenses between distribution costs, admin costs, and other operating expenses. If salary wages makes up 50% of your total expenses, I would like to see a line item here, salary expenses with the amount. Distribution expenses, depreciation expenses, if that makes up 30% of your total expenses, I would like to see a line item, depreciation, and then maybe other operating expenses and finance costs. So, depending on the type of entity, I will decide if I'm going to use the function of the expenses method or the nature of the expenses method. Now, I must tell you one thing, in your examples, you have never had a nature of the expenses type of question, and I think maybe this year should be the first year that we must ask a nature of expenses as well. So please go to your textbook, please have a look at what nature of expenses is all about. Good. That we've done. Now let me show to you, we've done this one, that was the two-statement approach. So let's do a little bit of humor. I'm very sorry to tell you that you only have 6 months to live. Oh dear, what should I do? Marry an accountant. Will it make my life longer? No, it will just feel that way. So don't be a pain in the butt for other people. Please go look at all this work that we've done, refer back to your textbook, and please come to grips with IS1.